This is All About Bitcoin, a show dedicated to all things, questions, and markets related to Bitcoin, little b for the currency, and Bitcoin, big B for the network, a collective journey to understand, apply, and use this innovation, all Bitcoin, all the time. I'm your host, Christine Lee, and Bitcoin trading within a $49,000 to $52,000 range today, while price swings of $3,000 might seem eye-popping to those in the traditional markets. In the digital asset space, it's actually a relief after going as high as $58,000 and as low as $45,000 over the past 5 days. The XPX Bitcoin price trading right now at $49,377. It's up almost 1% over the past 24 hours, according to trade block data. The XPX has been the most reliable Bitcoin price for institutions since 2014, with billions in assets under management benchmarked against it. Trading volumes on major exchanges have subsided from a flurry of activity seen earlier this week, with some $20 billion changing hands Monday and Tuesday on 8 major exchanges tracked by CoinDesk. By late Wednesday, volume had registered just at $4 billion. All right, looking at our top story, Coinbase is one step closer to going public. The financials of the largest crypto exchange in North America can now be viewed by the public for the first time on the U.S. Securities and Exchange Commission website. The Form S-1 tells us Coinbase had a good year in 2020, including $322 million in profit, $193 billion trading volume, $90 billion in assets in custody, and CEO Brian Armstrong, who we see here, made about $60 million in compensation, almost $2 million of that going to his personal security alone. Coinbase will be listed on the NASDAQ as COIN, fittingly enough. All right, so joining me now to discuss from Puerto Rico is GSR Markets co-founder and president, Rich Rosenblum. Welcome, Rich.
Hi, thanks. Good afternoon.
Good to have you here. All right, so is the latest Coinbase news responsible for the modest uptick in Bitcoin's price we saw today?
I think there's so many factors driving the price. It's hard to say. I'd say it's probably why the Binance token, BNB, has gone up in sympathy. It's sort of a proxy for Coinbase stock. But in terms of what's driving the price, it was one of the factors that would bring it up. But I think just a lack of selling and a bit of reduction, cleaning up in leverage would have also given some support to prices. So there's a lot of factors.
Yeah, we did see some trading volumes coming down. But focusing on Coinbase, what is the significance of this exchange making headway towards an initial public offering as it relates to Bitcoin?
I'd say people, especially from the traditional space, will look at the multiples and dig into the asset itself. But I think this is really a story about it being quite early in the innings for crypto, for Bitcoin, for our industry. And looking at the companies in the space, there's a lot of important, fantastic institutions, but very few were around in 2012. So I think being such a bellwether of the space and not having many missteps, it's that brand value. And also I think that on a big picture, when you're in an industry and it's super early, as it is in crypto right now, look at Tesla. People doubted Elon. People doubted that electric car company that wasn't able to deliver exactly on time should be able to achieve such multiples. Now suddenly value was achieved last year. You had a 700%. So that's self-driving cars, and ended up was more of a software issue than people expected. Software's eating the world. Look at crypto now. If software is eating the world, finance is dominating. Crypto is a combination of the two. And in terms of Coinbase, even at 70 some odd billion, that's still 1/10 of self-driving car company. Here we have self-driving finance, which I think is a much bigger category. So I think while it sounds expensive, I have pretty high confidence that in 2 years it's going to be listed higher. So there's volatility, especially in its underlying assets such as Bitcoin. And hard to say what's going to happen on the day of launch, but I do think in the ensuing months and years it'll be significantly higher.
Rich, interesting, just taking a look at the S-1 form, Coinbase has said that they anticipate operating expenses to increase significantly in the foreseeable future and may not achieve profitability or achieve positive cash flow from operations on a consistent basis. For instance, although they generated net income of $322 million in 2020, they incurred a net loss of $30 million in 2019. Rich, to me, this sounds like Coinbase profits mirror the volatility of the crypto markets, but what do you make of that statement?
I think that a warning that we might not be profitable in the future is taken as a negative sign in many cases. In this case, I think it's more that in seizing the opportunity effectively, thinking that the space is going to 10x or maybe 100x. It echoes what I think it was what Mike Novogratz mentioned in 2018, that if you're doing it right, you should be losing money in the bear market because the market opportunity is so big. It's not one where you're going to just go with organic growth. So I think when they're trying to seize a multi-trillion-dollar opportunity set, they shouldn't be focused on profits for the next quarter, probably not for the next few years. I think they're chasing the big elephant at the fair.
You know, Coinbase also identifies risks in this S1, including the identification of Satoshi Nakamoto, the pseudonymous person or persons who developed Bitcoin, or the transfer of Satoshi's Bitcoins. Why would that be a risk factor?
I think if you've read one of these before, you know that there's a absolute laundry list kitchen sink. I think this one, it's a little bit tongue-in-cheek because, it's a mystery that's been pretty unsolvable for a dozen years. But I do think that it's not a pure joke. There's regulatory implications that if you knew who profited, it could potentially make Bitcoin, in some people's eyes, more likely to be seen as a security. And even though they do have BDs, they could eventually have security tokens. If it was an illegal security for all these years, it would be a risk. But in my knowledge of the situation, I think it's a de minimis risk. It's just one of a fountain of many that need to be on these type of lists.
Great. Well, you mentioned a laundry list of risk factors. I'm just looking at other ones. Negative perception of Bitcoin or Ethereum could be one. Unpredictable social media coverage or trending of crypto assets, as well as decentralized finance. So you are right in that there are a lot of risk factors. But thank you very much, Rich, for joining me and sharing your insights on Coinbase and how it relates to Bitcoin.
You're very welcome. Thanks for having me.
All right, that was GSR Markets co-founder and president Rich Rosenblum in Puerto Rico. Coming up, the first Bitcoin ETFs have launched in North America. Should you be investing in them? Welcome back. Folks, a huge barrier to Bitcoin is education. We at CoinDesk try to onboard newcomers to the space by teaching the basics behind the finance and tech of Bitcoin through CoinDesk.com's Learn section. Joining me now to discuss is CoinDesk Learn editor OLLIE LEECH. Welcome, OLLIE.
Hey, Christine, how you doing?
Very good. Good to have you on. All right. So one topic that has been hot in the industry right now is North America's first couple of Bitcoin ETFs that have launched in Canada. You've recently published an article on what is a Bitcoin ETF. Let's start off there.
Yes, so a Bitcoin ETF, it's basically an exchange-traded fund. It's a type of traditional security that tracks the price of Bitcoin. So currently it's in US dollars and Canadian dollars. And unlike other funds, ETF units are traded on the stock market. So this means they can be bought and sold anytime during trading hours, whereas funds like mutual funds, for example, can only be traded once a day, usually at the end of the day, at the trade point when markets closed.
So, OLLIE, why would someone invest in a Bitcoin ETF rather than just buy Bitcoin? What are the pros and cons? Maybe start off with the pros.
Yeah, sure. So, it's a good question. So why invest in an ETF as opposed to directly through Bitcoin? So there's no need to store crypto yourself. This is the main benefit to a Bitcoin ETF. It's effectively crypto Bitcoin without the hassle. It's also much faster and easier for a novice user to purchase through this. It's a regulated platform. So when you go through a normal crypto exchange, this is an unregulated platform for the most part. So this is a little bit easier. There's also much clearer tax implications and guidance for people using a traditional security as opposed to a crypto asset. So this is where ETFs are also beneficial. And also stock exchanges are much more liquid than crypto exchanges. So it's easier to buy and sell an ETF at the time that you want, as opposed to a crypto exchange, which might not have the liquidity to help you with your order.
All right. What are some of the, do we have the cons of that chart up?
Yeah, sure. So, as you can see, trading is limited to market trading hours with an ETF, whereas a crypto market runs 24/7. So, for instance, if you've just bought an ETF, the market's closed, but the price of Bitcoin is now running because people on the other side of the world are trading it, you're going to have to wait until the market reopens before you can start buying and selling more ETF, of the ETF if you want to. There's also the disadvantage that ETFs charge a management fee. And even though these are relatively quite low at the moment compared to other ETFs, it's still a fee that people have to pay. And if you were to buy Bitcoin yourself, store it in your own hardware wallet, so like a Ledger, a Trezor, or a KeepKey or whatever, you can hold that indefinitely and you don't have to pay for it. And that's one of the advantages. Anonymity is also a big thing, so Bitcoin can be sent and received and sometimes bought through exchanges without having to go through KYC policies. Obviously, with a regulated platform, that's completely the opposite. So that's just sort of one disadvantage. And the main thing is it's kind of an advantage and disadvantage, storing it with a third-party custodian. You're guaranteed a professional security service, but at the same time, you're not holding it yourself. And that to some people is a disadvantage.
All right. And what can you tell us about the Canadian ETFs that were approved last week?
Yeah, so really exciting. So we've had 2 ETFs now approved for the first time ever. So the first one was a purpose ETF, and that was for purpose investment. The second was from a company called Evolve Funds Group, and that's the Evolve Bitcoin ETF. They're very similar products. I mean, both are physically backed ETFs. So this means that when you invest in ETF, the fund actually buys Bitcoin, and you, the investor, have that in your portfolio, as opposed to something like a Bitcoin futures, which for the most part are cash settle contracts that represent the underlying price. So you never actually own Bitcoin. So this is huge. This is for adoption, for mainstream institutional investors getting into Bitcoin, and also for retail investors as well, who just don't want to handle cryptocurrency exchanges. Like I said, the management fees are kind of similar. They were up until a couple of days ago. And Evolve has now decided to drop its fee from 1% to 0.75. So a little bit of a price war going on.
Yeah, Ollie, I wonder, why has the SEC rejected so many ETFs in the United States? And I wonder if these Canadian ETFs pave the way for ETF approval in the United States. What are your thoughts?
Yeah, exactly. There's a lot of traditional financial proponents and crypto proponents in the space that are really optimistic that these new ETFs in the Canadian space are going to pave the way for the US SEC to now reconsider ETFs in the United States. The previous grounds that they've used to reject them have been that the crypto market is too volatile, it's too risky, there's prone to manipulation and all these things. But now, especially with the Wall Street Bets Reddit group situation, it's kind of proven that the stock market is also it can be prone to manipulation. It can be volatile as well. So it's going to be a really interesting time to see how the SEC deals with this. Now that we have 2 pending reviews with, ETFs with the SEC right now.
Excellent. Thank you so much, Ollie, for your insights onto the Bitcoin ETFs.
No worries. Thank you.
All right, that was CoinDesk Learn editor Ollie Leech. Visit the Learn section on CoinDesk.com for explainers on Bitcoin ETFs and other crypto topics. Time now for the chart of the day. Institutions appear to be buying the dip at relatively bargain prices in the wake of Bitcoin's recent pullback. BTC outflows from Coinbase Pro, an exchange that targets institutional customers, rose to over 13,000 BTC, or 11 basis points today, worth around $650 million. You can see that as Bitcoin's price, represented in black, goes down, outflows from the represented in orange, you can see a huge spike as that happens. This represents the largest movement of Bitcoin off Coinbase Pro in 3 weeks, according to CryptoQuant data. CryptoQuant CEO Ki-Young Ju telling CoinDesk the outflows went to multiple custody wallets, indicating U.S. institutional investors are still buying Bitcoin on the dip. The latest pickup in outflows is a sign that institutions remain undeterred by the recent price pullback and are confident about Bitcoin's long-term prospects. All right, that's it for All About Bitcoin. I'm your host, Christine Lee. Join us tomorrow morning at 9 a.m. in New York for First Mover, your first look at the day's global crypto news headlines. You're watching CoinDesk TV.